Live from London, I'm Barton.
And in New York, I'm Julie Hyman. This is Bloomberg Markets.
Julie, let's get to our wonderful Futures in Focus section. After a global rout, commodities clawing back losses, investors feeling a bit more optimistic. Trade tensions easing between China and the US. They're back on. Bob Iaccino of Path Trading Partners is at the CME. Bob, that sort of bear market in copper, the sell-off in base metals, how do you see it through your hourglass?
Well, obviously, we're looking at tariffs. Some of the economic data had started to soften prior to the ridiculous potential load of tariffs being announced. The early tariffs don't really have that much of an effect on anything except maybe base metals, certainly not on consumer demand for anything like gasoline, i.e. crude oil, but the base metals took the earliest hit. So as we go deeper and deeper without results, obviously the base metals are going to be what kind of gets the foot on the neck, so to speak, in the whole commodity space. Crude oil's got a little bit of an effect on that now, but it is good to hear about the at least low-level talks coming up between China and the U.S. to possibly put a floor into these things.
So what are the key levels, Bob, for copper, Dr. Copper? It's the bellwether of the global economy. You know, we've gone from 7,500 to just below 6,000. What are the key levels from here? Where are we heading?
Well, 6,250 has got to be the first area that you got to stabilize above. And quite frankly, copper to me has kind of lost its Dr. Copper title over the last, say, 8 to 10 years because of it's just been a kind of a different economic situation with central bank involvement. It's really more a barometer of China's economy. It is theoretically possible the global economy is doing better and China hasn't quite caught up, and therefore copper will not. But it will get back into that mid-6,000 range if we can get just a little bit of global market recovery. But you're still looking at it being a China story, and as I mentioned, some of China's economic data had started to slump prior to the tariffs. I don't necessarily think the political effect will hit President Xi Jinping. I don't think anyone does, but you have to get copper back up to that midpoint before you can see any sort of extended move higher.
So, Bob, does any commodity deserve the letters Doctor or DR in front of it, or is that ship sailed?
Well, it's more the entire commodity market. I don't think any one can be anymore, and you really can't even use it with crude oil at all. I mean, crude oil is a completely different situation. 25, 30 years ago, an increase in crude oil price, 10 of 11 crude price spikes was followed by a U.S. recession. Not necessarily causality there, but definitely a relationship. And that's not the case anymore when you consider 1.7 million jobs are supported in the fracking shale oil in the U.S. So it's not necessarily a title that can fit any one commodity. It still probably best fits copper. It's just not going to be a one-to-one relationship like we might have seen 20 years ago.
Bob, quick comment on crude. I'm looking at the chart where you know, we're near or at the levels we were in June when we were at the lows for this period, May through August. $64, just below $65. Are you a bear or are you a bull?
I'm a bear. Short term, the rally's over. We've got an increase in rigs, although the rigs are less productive than they've been. That's still more crude oil in the market. Seasonality usually turns right around late August to mid-September. We're starting a little early, which I see, given the cheap airline prices, as being something that's likely. We're starting that turn a little early. And then you've got refinery turnaround coming on, and the restrictions of pipeline from the shale regions is going to cause a pileup of inventory. So I'm definitely a bear. Short term, the crude rally is over.
Bob, great to see you. Bob Iaccino of Path Trading Partners at the CME. Julie.